Good morning, students. Welcome back. So today we plan to cover a couple of chapters. Chapter is 8 and this chapter 9. Okay, so there are few auditing standards again that we are going to cover. You can say it's about the specialized areas. Now, what are those specialized areas that is available in front of your screen, and we'll also talk about the related services. Yeah. We also see Saminathan over here. Very good morning, Saminathan. Now, if you talk about specialized areas, now what do you mean by that? Okay, so we mean to say that there are three areas we plan to cover. That is about special purpose framework. Okay, now what is the special purpose framework? You can say when the financial statements are required to be prepared, not as per the requirements of you can say this Companies Act. Okay, this audit that we do from April to March on an annual basis. Okay, other than that, if let's suppose if there is any other purpose, that is what you call as special purpose, and this is what the auditing standard 800 talks about. Then we'll also talk about SA 805, which is about audit of a single financial statement or maybe a specific element or the line item of the financial statement. And then we have this SA 810, which will talk about the engagements. Okay, it's not really the audit. We'll talk about engagements to report on summary financial statements. Right now, what are those summary financial statements? Some of those things we'll cover. Now, moving on to this special purpose framework. Right. So now, what is special purpose framework? Let's try to understand this. You can say it's a financial reporting framework designed to meet financial information needs of specific users. And this framework may be a fair presentation framework or a compliance framework. Now, what do you mean by this special purpose framework? Let's take an example for this. Say an entity has this reporting year April to March. So what do? They prepare their financial statements from April to March each year. Right, so that's a standardized procedure which they follow. Now, for this period, let's suppose there is another requirement from the investor of the entity. What is that? The investor wants the financial statements, say, as per IFRS. Now this is a different requirement which the company will have to work on. Means they will have to prepare their financial statements as per this, you can say, a special requirement. Correct. So in this case, the financial statements which are prepared, what do you call them as? They are prepared for a special purpose. Another example could be the reporting year. Say the entity prepares its financial statements from April to March. Okay, that's the statutory requirement. See, the investor requires the financial statements of the company from January to December. Okay, maybe for consolidation purposes, or maybe that's the period they want to review. Now here again, the financial statements which are prepared in such a scenario, what do you call them? Those are being prepared for special purposes. Okay. Or maybe there is a requirement coming from some other statute. Okay. draw down the financial statements of a company specifically for their purposes. Now, all of these are what? All of these are examples of the of you can say the purposes which could be there for the preparation of financial statements over and above what is already prepared or which is going to be prepared by the company. Yeah. Now, in this case, the question arises, what will happen to the form, content of the financial statements? And what constitutes a complete set of financial statements which will be prepared for special purposes? Okay. Now, in this case, see the form and content will be prescribed by what? Will be prescribed by that requirement. So if let's suppose investor has a requirement, so investor will specify what should be the form, what should be the content, what should be the basis. So you can say this basis of preparation, where does it come from? It will come from that particular requirement only. Okay. Yeah. So that's why when the financial statements will be prepared and presented, so the basis of preparation will have to be specified in the financial statements. Okay, because it's not the general purpose framework. It's a different framework which is used, right? And the important part is that such financial statements are meant only for special purposes. Okay, yeah. Now what could comprise of a complete set of financial statements? See, the complete set of financial statements will have the similar meaning. Means they should have all the components which we understand which are required in relation to any set of financial statements. Okay, now the question arises that something that we have discussed was all about financial statements, and to prepare to present the financial statements, that's the responsibility of the management. So are we looking at it from the management's perspective? Answer is no. We are looking at it from the auditor's perspective. Right? So in this special purpose, what is it that the auditor is required to do? Yes or no? Yeah. So let's try to understand that. Now, when a special purpose financial statements are prepared, so it may happen, it's required to be audited as well. Because the person who has required the presentation of the financial statements, okay, may also require the same set of financial statements to be audited as well. Correct? And in such a scenario, when the audit of that particular set of financial statements will be carried out, now what will happen to that? How do you deal with that? So as an auditor, you will audit that special purpose financial statements. Yeah, that's where you can say it gets linked to the audit requirement, because now the audit is not done for a general purpose financial statements. Now the audit is required to be done for a special purpose financial statements. Okay, so that's how you will differentiate between these two. Correct? Yeah. So now, where does this requirement come from, and when does this requirement come from? So here again, We can take few examples, but it could be any requirement. It may be coming from anywhere. Important thing is to understand that any set of financial statements that we prepare, which is for general purposes, it should not be the one which is a general purpose. Correct. If it is different from that, that is where it falls under this auditing standard. Now a question arises that when we have to audit this particular set of financial statements, okay, in case of such an audit, do we have some different considerations? Means the way the audit is required to be done, the various requirements that we understand that exist for an audit. So do we say that those requirements are going to be now different? Or will those largely be the same? So now here again, one should understand the fact that the audit requirements will continue to remain similar. Yeah, because when we say audit, irrespective of the underlying item which is getting audited, whether it's special purpose or something else, all those considerations have to be there. Yeah, for example, independence, right? Various ethical requirements, various acceptance formalities. Before you accept an audit, there are a lot of procedures based on ethics, based on independence, that are required to be looked at. So should the auditor be looking into those considerations? Answer is yes. It's not different, right? So the considerations are not going to change. So the considerations are going to remain sort of similar. Okay. Now, another point. When it comes to planning, or when it comes to audit of such an entity or such a set of financial statements, now what do you do? So here again, the similar sort of planning procedures will be required. Understanding of the entity, understanding of its business, understanding of various processes of an entity. Also, this special purpose framework which has been prescribed, okay, which has been used by the entity. Auditor will have to obtain a clarity on that, because that is the basis of preparation of the financial statements. Yes or no? So if the auditor were to audit, so it's important for the auditor to look at that basis, to understand that basis. Only then the auditor will be able to audit. So no, otherwise, how will he audit? He will not be able to audit that. He will not be able to look into most of the things. So that means before we really start the audit, or you can say start some of the procedures, one of the essential requirements, which is generally there in case of audit, that is about understanding, will continue to remain here. Yes or no? So that will continue to remain. So that will not change. Yeah. So here again, it's important to look into that. It's important to consider that. Right? So that's not going to change. Okay. Now, as regards the applicable financial reporting framework. It's again up to the auditor to look into it, to understand that. Okay, now in this case, there are a couple of points which are important to understand. One, entity is preparing the financial statements for a special purpose. Special purpose means such a set of financial statement is meant only for certain users. Or you can say there's a category of users. It's not meant for all. That's why it's a special purpose. Yes or no? Unlike a general purpose, it's not meant for all. Correct? Now, it is very important for the entity to consider this aspect, that it's not a general purpose framework, it's a special purpose. And accordingly, it should be made available to those categories of users because it's meant only for them and not for others. And that's why it is also important that somewhere in the financial statements it should be clarified. Yes or no? That it's a special purpose financial statements and it becomes a responsibility of the auditor as well to specify that this set of financial statement which goes out, okay, this has not been prepared as if it's a general purpose framework. It's a special purpose meant for certain categories of users. So that's why it's again meant for that. And this is what the auditor will include, you can say, as a para in his audit report. Right? So, to avoid any sort of confusion, maybe the user is looking at this particular category of this particular set of financial statements and this is not really meant for them. So that's where auditor will alert. So how will the auditor do that? Auditor will specify in his audit report. Okay, explaining that the financial statements are prepared in accordance with special purpose framework and therefore they may not be suitable for another purpose. Right? And this is covered under this heading called as emphasis of matter. So you may be thinking that emphasis of matter is meant for something to be highlighted in the financial statements. Exactly. So the auditor is just trying to highlight this part about the financial statements. Okay. About the basis of preparation, which the management has considered. Correct. And the second aspect is about the restriction on the distribution or use. So in addition to the alert, which the auditor will sort of include in his audit report, what is it that the auditor will do? Auditor may consider it appropriate to indicate that the auditor's report is intended solely for the specific users. So that's what he'll specify. Depending on the law or regulation applicable, this may be achieved by restricting the distribution or the use of the auditor's report. Okay, so the paragraph alerting the readers may be expanded to include these other matters and heading modified accordingly. Okay, so that's why what do you see in the financial statements? You will see this note. Okay, so it's a standard note that you'll see. What is that? Basis of accounting, which is emphasized, or you can say which is highlighted, and restriction on distribution and use. Means it's meant only for that particular category. So this audit report, this set of financial statement, management should not be distributing to all. Okay. So let's also understand. So if you read this para, you will get the clarity. We draw attention to note 10 to the financial statements, which describes the basis of accounting. The financial statements are prepared to assist the company in complying with the financial reporting provisions of the contract referred to above. Now, this referred to above will be clarified in the basis of accounting. As a result, financial statements may not be suitable for any purpose. Our report is intended solely for the company and DEF Company Limited. Means it's meant for these two parties and should not be distributed to or used by parties other than the company or DEF Company Limited. Our opinion is not modified in respect of this matter. Okay, yeah. So this is what the company will also be considering on the basis of the note which is included in the auditor's report. So this note that we are talking about, so this is something you'll have in the auditor's report. And corresponding to this note, what will be there in the financial statements? Basis of preparation. Okay, so that anyways is a standardized thing, okay, which you'll have in every set of financial statements. So in the basis of preparation, what will the management include? They will include the basis, right? They will explain what has been the basis, all of those requirements. Correct. Now, moving on to SA 805. So when we talk about SA 805, it is first of all important to understand the context. Yes or no? Because here again, if you look at the audit, it's a special type. Okay. Special type, you can say, is something which is not a general one. General means something that we have been discussing all this while in our sessions. But it's different from those ones. And here again, it is important to understand as to what is the underlying item. Underlying item means what is going to get audited, right? So that's what is important first of all, because once you have that clarity, so you'll automatically understand as to how the audit is required to be done. I'm sure you would have understood that when it comes to special purpose financial statements. So all the audit procedures, be it planning, be it testing part, whether it is about testing of controls, testing of details, conclusion, reporting requirements, those are all same. Okay. Here again, what you will do is you will audit the details. You will pick up the samples. All of those procedures will be similar. Correct. The only thing is the way those details are prepared, the way those samples would be there, will be based on a different accounting framework. Correct. So that's the only difference you are going to see. Now, can we say that the audit requirement changes? No, audit requirement doesn't change at all. So all those requirements will remain similar. So here again, what we should try to understand first of all is what is the underlying item. Okay. So it talks about single financial statement and specific elements, account, or items of a financial statement. Yeah. Now, in this case, the question arises, are we talking about a component audit? No. So SA 805 does not apply to the report of a component auditor. Okay. So we are not talking about the audit of a component here. Something that you see in case of SA 600, wherein you have the principal auditor or the component auditor. No, we are not talking about that situation. Okay. So it's not a sort of duplication, right? So now let's try to understand what is this underlying we are talking about. A single financial statement is to be distinguished from a complete set of financial statements. For example, cash flow statement. Okay, what is that? That's one of the component of financial statement. If let's suppose that cash flow statement is required to be audited, not as a part of audit of complete set of financial statement, no, but on a standalone basis, means that's the only requirement. So what do you call it as? Single financial statement. An element of a financial statement means any element, any account, or any item of a financial statement. Say we are talking about only the trade receivable, only the cash and bank balances. That's what you call as element of the financial statement. A single financial statement or a specific element of a financial statement includes related notes, ordinarily comprising a summary of significant accounting policies and other explanatory information relevant to the financial statement or to the element. Okay, so I can see a lot of examples coming from Saminathan as well. Very good. So he talks about equity, liability, various assets. Okay, any component of financial statement. Okay, yeah, that's correct. Absolutely correct. Very good. Now, here again, the question arises that when you will accept such an engagement, okay, now we have understood what is the underlying item, and we also understand that it's the audit which is required to be performed. Now, in this case, some of the ethical requirements, some of the audit specific requirements, for example, independence and all, do we need to consider that? Answer is yes. See, the moment we say there is an audit, in fact, the moment we say there is an assurance, all sort of ethical requirements will automatically get involved. Okay. They will have to be fulfilled. They will have to be looked at by the entity. Right? No. In case there is an audit of single financial statement, now it should also be considered what? Whether the application of financial reporting framework will result in a presentation that provides adequate disclosures, okay, to enable the intended users to understand the information conveyed. Yeah, so this is again a very important consideration. Now, this single financial statement or the specific element may be prepared in accordance with applicable financial reporting framework that is based on financial reporting framework established by an authorized or recognized standards. Okay, so here again we need to look into it, we need to consider that. Yeah, because that will become the basis. Yes or no? Now, what are the considerations when you plan and perform the audit? Now, in this case, because it's an audit, so that's why one can say that the audit procedures or the audit requirements means when we talk about planning, when we talk about execution in terms of the audit procedures, are those requirements going to be any different? Answer is no. Those requirements are going to be sort of similar. The only thing is those requirements are now going to be limited because it's not about a complete set. It's about some limited items. Okay, so that's why those requirements are going to be the one which will apply to that limited set. Yes or no? Yeah. So that consideration will have to be kept in mind. Yeah. Now, in this case, when it comes to expression of an opinion, now that again will have to be looked at on the basis of similar guidances that we have under various auditing standards. Now, again, depending on the type of requirement that we have. Okay, so those requirements are again not going to change. Here again, all sort of considerations are required to be given. See, one thing you need to remember is that it's an audit. Okay, the moment we say it's an audit, all sort of requirements will get involved. So there could be a modification in respect of that item. There could be an emphasis of matter. Okay, so all sort of requirements will have to be considered. So these things are not going to change, right? Now, let's try to look at some of the examples. Accounts receivable, inventory, or you can say there are some notes. Let's suppose it's a schedule of that tangible assets along with the notes related to tangible assets, means PPE. We are talking about PPE here. Or maybe there is a schedule of disbursements in relation to lease property along with the notes, right? So these are, you can say, some of the examples you may have in relation to this particular category of audit. And again, it may vary from entity to entity, right? All right. So any questions so far? I think Saminathan anyways has been sharing a lot of examples. Yeah, all clear? Great. Yes. Yes, that's applicable, but there again, you'll have to specify. Okay, that will have to be looked at on the basis of the specific requirement, whether it's required by that particular special purpose framework or not. So that's how you'll look into it. Okay. Moving on to the next auditing standard, SA810. Now, it talks about engagements to report on summary financial statements. Now, please understand, over here we are talking about reporting on summary financial statements. Now, it's a new term which has come up. We have looked at special purpose framework. We have looked at single financial statement. We have looked at element of financial statement. So what is the summary financial statement? So it appears to be something new, something different. Yes or no? So let's try to understand this, right? So this auditing standard deals with auditors' responsibilities when undertaking an engagement to report on summary financial statements derived from, now this is important, derived from audited financial statements, means which are audited in accordance with various essays by the same auditor. Now the important part is what? Say there is a company ABC Limited. Its financial statements have been audited by the auditor, right? So you have audited financial statements of ABC Limited. Now the same auditor who has audited this is required to report on summary financial statements of ABC. Yeah. So you can say there is another reporting. There is another special sort of reporting that is required. Now, what is that reporting? We'll talk about it. But it has to be the same auditor who is required to report on that. Very commonly, you see there's a thing called as abridged set of financial statements. Okay, so you can say that's an example for this. Okay, now in this case, let's try to understand what is the summary financial statements to begin, because once we get the clarity on the underlying, we have understood that a lot of other requirements will automatically become clear. Yes or no? Summary financial statements reflect historical financial information that is derived from financial statements, but that contain lesser details than the financial statements as a whole, while still providing a structured representation consistent with that provided by the financial statements of the entity's economic resources or obligations at a point in time, or the changes therein for a period of time. Different laws and regulations may use different terminology to describe such historical financial information. Okay. See, a very common example for this could be abridged set of financial statements. So that is something which you very commonly get to see, right? Now, in this case, because the auditor is involved, now please understand, it's the auditor who is involved. It's the auditor who is required to report on this. Correct. So that's why all sort of considerations which an auditor needs to have will also be required here. Yes or no? So all sort of considerations which the auditor needs to have will also be required here. So those are not going to change. Yes or no? So now, what are those considerations? Acceptance procedures, ethical requirements, all such requirements will therefore apply to this type of reporting requirement as well. Now, why is that so? Because the auditor is involved here. because the auditor is involved. Correct? Next, as regards the summary financial statements, is it the auditor that is required to prepare that? No. See, any underlying item that is audited, who will prepare that? Management. You can say the entity will prepare that. Auditor will not prepare that. Right? Auditor will not prepare that. It has to be prepared by the management. Auditor is there to audit. Okay. Now, in this case, when such set of financial information, let me just call it as financial information or say summary financial statements which are prepared. Now, what will become the basis? That again will have to be put down in that summary financial statements. Okay, that will have to be put down. That will have to be included in that financial statements. Okay, and here again, all sort of responsibilities in respect of independence, in respect of various ethical requirements will apply. Okay, that will apply. Now, what are those procedures that will have to be performed by the auditor? Here again, the nature of procedures is not going to be any different. See, the only difference is that because a full-blown audit of the financial statement has already been performed. Now, this is important. A full-blown audit of the financial statement has already been performed by the same auditor. So that's why auditor can always leverage on that. Now, on the basis of the audited financial statements, now you can say some sort of summary or some sort of extract is produced, which is now looked at by the auditor, on which certain procedures are required to be performed. So of course, auditor will plan everything. Auditor will also be performing certain procedures. But over here, you will not see the procedures in relation to the control, procedures in respect of testing of details, because all those things have already been performed by the auditor. See, this is more about the presentation and the disclosures part. Yes or no? As to what is getting included in the summary. And to ensure that the summary has been pulled out from the complete set of the audited financial statements. Right? So that is what the auditor will try to do. So all of his procedures will be revolving around that sort of check that whether it's been done on that basis or not. Right. So you'll evaluate whether the summary financial statements adequately disclose their summarized nature. When the summary financial statements are not accompanied by audited financial statements, evaluate whether they describe clearly for whom or where the audited financial statements are available. Because if any user has to go look into the details, he can do that. So it's all about putting a reference. Yeah, that will help the users. Evaluate whether they describe clearly the law or regulation that specifies that audited financial statements need not be made available to the intended users of the summary financial statements and establishes the criteria for preparation of summary financial statements. Evaluate whether summary financial statements adequately disclose the applied criteria. Compare the summary financial statements with the related information in audited financial statements to determine whether the summary agree with or can be recalculated from the related information in audited financial statements. Evaluate whether the summary are in accordance with applied criteria. Evaluate whether the summary contain information necessary and are at an appropriate level of aggregation so as not to be misleading in the circumstances. Evaluate whether the audited financial statements are available to intended users of the summary financial statements without undue difficulty. Unless a law or regulation provides, they need not be made available to them. Yeah, so these are some of the considerations. Now, as regards forming an opinion, see, for opinion part, similar sort of requirements will have. The only thing is that because it's a report on summary financial statement, so that's why what are going to be the elements? You'll have this title, addressee, then of course summary financial statements. Okay, opinion to begin with, right? And then you have this management's responsibility, auditor's responsibility. Of course, this has to be signed with the UDIN because again, it's an audit report. Yeah. So all those requirements, when it comes to the audit, you'll have that on a similar basis covered over here as well. The only thing is now you have some sort of limitation in terms of what is getting audited as far as the procedures are concerned. See, when you talk about special purpose financial statements, single financial statement, or the summary financial statement, these are all, you can say, meant for special purposes, all of them. So that's why in all of these cases, what will you find? The basis. And because it's a special purpose, so that's why it's not meant for all. It's meant for a specified category of users. So that's why in all these cases, what will you find? Restriction on distribution or use. Right? Okay. Now, as regards the comparatives, if the audited financial statements contain comparatives, but the summary do not contain the comparative, auditor shall determine whether such omission is reasonable. Yeah. A fact of unreasonable omission. Accordingly, the reporting requirements will have to be looked at. If let's suppose there is some unaudited supplementary information which is presented with the summary, right? Auditor shall evaluate whether any unaudited supplementary information presented with the summary is clearly differentiated from the summary or not. If the auditor concludes entity's presentation of unaudited supplementary information is not clearly differentiated from the summary, auditor shall ask the management to change the presentation of unaudited supplementary information. Right? Otherwise, auditor will have to have that reporting requirements. Okay. Now, because it's the auditor, so that's why please remember who has audited the financial statements. So sometimes what may happen is, say the audit got completed, say on 31st of May, right? I'm talking about the complete set. And now this summary, say for example, will go out on what, 30th June, because same day it will not go out. Yeah, so there could be a time lag. Now, what if there's a time lag? So the auditor's report on summary may be dated later than date of auditor's report on audited financial statements, means complete set. In such cases, auditor's report on summary shall state that summary and the audited financial statements do not reflect effect of events that occurred subsequent to date of auditor's report on the complete set. Auditor may become aware of facts that existed at the date of auditor's report on audited financial statements, but of which auditor previously was unaware. In such a case, what will he do? Auditor shall not issue the auditor's report on summary until auditor's consideration of such facts in relation to the complete set has been completed. Okay, of course, you will have to look into it. When the auditor reports on summary after the completion of audit of complete set, auditor is not required to obtain additional audit evidence on the audited financial statements or the report on the effects of events that occurred subsequent to the auditor's report on the audited financial statements. Since summary is derived from what? Since the summary is derived from that part only, right or not? Because that is derived from that part only, right? So that's why he'll not get into all of those things over here. Correct? Yeah. All right. So with this, I think what we can now do is, let me just quickly move on to the questions. So now what we will do is, before we move on to the next topic, let's discuss the questions around this. Okay. So then we'll pick up the next topic and the questions around it, right? So now moving on to the questions. So I'll just share this document now. Just give me a minute. Okay, so let's look at this. Right? CA Lalita is the auditor of a company. Now, in these questions, see, in some of the cases, what you may also find is that the applicability of the relevant auditing standard you'll have to consider. You'll have to think through carefully. Okay, so that is again something you'll have to consider. CA Lalita is auditor of a company. She is also offered professional work of audit of financial statements prepared specifically. Okay, so now please understand, it's the audit first of all. Yeah, so by professional work, you should not be assuming always that it's not an audit. Okay. Financial statements prepared specifically for meeting the requirements of a loan agreement for the same period. For the same period means, say, April to March, company is preparing the financial statements, and they are also required to prepare another set of financial statements as per the loan agreement. Okay. So she chooses to accept the audit and has made up her mind to disclose this fact in emphasis of matter paragraph in the audit report to be issued by her for this specific engagement. Now, in this case, you need to discuss this. So I would say we can discuss this completely. Forget about the approach. Now, what is this engagement? Where do you cover this? What all considerations you should have? And of course, whether she can accept it or not. If she will accept, what is it that she will be required to do? So let's talk about this in entirety. Yes, over to you. Saminathan, you'll discuss this.
Yes, sir. Good morning, sir.
Good morning.
See, here here Lalita is a statutory auditor, and also she would like to take that audit of the special purpose, which is
Right.
meant for the loan agreement.
Hmm.
Here, she can accept that offer as well. There is no restriction on this.
Hmm.
However, she is intended to put this matter in the emphasis of matter paragraph.
Hmm.
This is okay. Her approach is proper. There is no disconnect on as per the SA 800,
Hmm.
and for us general purpose financial statement also. That is the separate framework. This is separate framework. But
Hmm.
report will be given by her the statutory audit paper as a general purpose financial framework. Here in that this is a special purpose. According to that loan agreement, she will see that whether that engagement is in proper, all these things. What is the agreement, whether is properly prepared by the management. As per that,
Hmm.
is there any disconnect? Only those areas she will look into that before accepting. Then absolutely fine on this case, sir.
Okay. In the given case, our approach is appropriate because it's an audit. Therefore, there is no bar upon accepting such an engagement, even though she happens to be the statutory auditor. Auditor means statutory auditor. So, can a statutory auditor accept such type of audits? Yes. Besides, she has intended to disclose this fact in the emphasis of matter paragraph. Okay, which is again appropriate, in fact, which is something you can say required as well. Yeah, so you can say it's sort of mandatory requirement. This anyways has to be done, right? Now, next question. CA Lakshmi has prepared a draft audit report. Okay. It's for the financial statements of X Limited prepared in accordance with financial reporting provisions of a contract with Y Limited. We are not aware of those provisions of a contract with Y Limited, but that's the thing which is available. She has drafted an unmodified opinion to be given in the audit report. Means her opinion is clean. Okay. Besides, she has also drawn attention in the draft audit report to note A to the financial statements. Now, what is this note A to the financial statements? It's about the basis of accounting which has been followed by the management. Okay. Now, in the given case, how should she ensure that the report would not be misused? That's one. You are required to draft a suitable para to be included in the report for this purpose. Yeah. So I would say there are a couple of things. One, what type of audit you find which is applicable over here means which auditing standard you'll say will apply in the given scenario. That's one. Number two, As regards this requirement that we understand, okay, why is this restriction required? And of course, how will you draft it? Yes, over to you.
Yes, sir. This particular question is talk about a SA 800 again. That is
Okay,
special consideration relating to the special purpose audit of special purpose framework.
okay.
Here, they prepared in accordance with the reporting provisions of contract with Y Limited, which
Hmm.
means there is a special purpose.
Okay.
In this case, how she should ensure that report would not be misused. She can put the restriction the clause as we discussed, the basis of accounting and the restriction on distribution and its use,
Hmm.
and wherein she can highlight like we have drawn we have drawn attention to the see they provided note number A as well.
Okay.
So drawn to the note A of the financial statement, which describes that the basis of accounting, and this is this report is prepared only for the intended use. In this case, is the Y limited. It's not meant for any other purpose. It's not for
Right.
distribution and use.
Okay.
Only this is specifically between the X and Y.
Hmm.
That restriction to be mentioned in that paragraph, sir.
Okay. And do you also want to attempt the language?
Language, okay, sir. We draw attention to the note number A to the
Hmm.
financial statement,
Right.
which describes the basis of accounting,
Hmm.
and the financial statement which prepared in accordance with the contract,
Hmm.
the provision provided by with the Y limited and X limited.
Okay.
So based on that, this financial reporting is prepared.
Right.
As a result, the financial statement may not be suitable for the other purposes. Our report intended only for X limited and Y limited
Right.
and should not be distributed or used by any other party other than X limited and Y limited.
Very good. So let's look at this. Now, in this case, as regards this requirement, once again, what do we have? Audit under the special purpose framework, right? Now, in this case, those two requirements will automatically apply. Now, what is that? Restriction on the usage. That's one. And drawing the attention of the users that it's a special purpose thing. It's not a general purpose. Okay, so accordingly you take the decision if by chance you come across this set of financial statement. Yeah. So is it a mandate? Answer is yes. This will have to be included because otherwise the users may get confused. What if they come across the set of financial statement which is a general purpose along with this, and maybe they see two different numbers over there? Why? Because the basis of preparation is different. So can the numbers reported at two places be different? Answer is yes. That's possible. You don't know. Now, how do you draft it? Now, this is something which you also need to take care because in the exam you may be asked to frame this. Okay, so that's why it's important you to practice on this aspect as well. Without modifying our opinion, we draw attention to note A to the financial statements, which describes the basis of accounting. So first of all, it's about highlighting the basis of preparation. Okay, yeah, so that's the first requirement we have. Number 2, as a result, the financial statements may not be suitable for another purpose. Our report is intended solely for what? X and Y, and should not be distributed to or used by parties other than X and Y. So you can say this is going to be the second requirement. Right? Clear? Let's look at the next one. CAM Surya is the auditor of financial statements of an entity prepared in accordance with financial reporting provisions of a contract. Now, once again, we have the financial statements prepared in accordance with financial reporting provisions of a contract. Okay. He is also offered an audit of trade receivables appearing in the above financial statements. So you can say there's a set of financial statements he's been auditing, and now he's also offered to audit trade receivables. Right? Can he accept such an engagement? That's the first question. Discuss brief outline of his audit approach in such a situation. Okay. Yes, over to you. If you can just discuss this in entirety. Yes, Saminathan.
Yes,
You
sir.
will attempt this?
Yes, sir.
Good.
The thing here, the financial statement of entirely is prepared in accordance with the financial reporting provisions of a contract. Here, the SA 800 will be applicable. The reason is it's a special purpose financial purpose, and also so he has taken the trade receivable alone. That's an item,
Okay.
which means that SA 805 also here is applicable. So when she is accepting, see, both can be accepted. There is no contravention on this. She can accept that both audit, and while she is preparing that trade receivables the financial statement, the outline would be the approach of the situation. She prepared that financial statement based on that a special purpose framework. She has to consider both SA 805 as well as 800 as well to comply with that this particular audit, sir.
Okay. So let's look at this. The single element or the single financial statement may be prepared in accordance with general or special purpose framework. Now this part is important. Okay, so it's not necessary that it will be prepared in accordance with general. It can be general or special purpose framework both. Right? Excuse me. Excuse me. If prepared in accordance with special purpose framework, in such a case, what will happen? SA 800 will also apply. Okay, so that will also get involved. In the given case, now what has happened? Financial statements are prepared in accordance with special purpose framework. So now when the financial reporting provisions of a contract becomes the basis, So this financial statement that we get audited. So what do we have? So over here we have SA 800. Correct? Now, on the basis of this set under SA 800, auditor is also required to audit trade receivables. Now, if the audit is only required for trade receivables, what do you call it as? An element of financial statement. Yes or no? Because it's not about full-blown set. Full-blown set is already audited. An element is also required to be now audited. Maybe there is a purpose. That's why they are getting it done. Okay. So now in this case, what do you do? In this case, SA 805 also comes into the picture. Correct? Now the question arises, can the auditor accept both? Answer is yes, because both are audit. Okay, both are audit. So can that be applied? Yes. Both can be considered. There's absolutely no problem. Okay. Next. CAG is offered appointment for audit of trade payable. Of the financial statements of a company. Now the framework is not given. Huh? However, the financial statements prepared under Companies Act are audited by CA Jignesh. Now we have a different situation over here. Huh? For the audit of trade payable, we have one auditor. Okay. Now this trade payable, or you can say this is an element. This is an element only of the financial statements which has been picked up for audit. So this element which you pick up is from the general purpose financial statements. It's not a special purpose. But the problem is that such financial statements is audited by another auditor. So auditor at two places are different. Discuss why it would be practically difficult for CAG to perform such an audit. Yes. Any thoughts?
Yes, sir.
Yes.
Here, that special consideration with the single element and that items of the audit is given, is taken over by the CAG.
Right.
And whereas the full set of financial statement is done, the statutory audit done by that CA
Jignesh. Yes.
Jignesh.
Hmm.
See, in this case, the compliance requirement of the single audit and the special purpose is different.
Right.
When that audit of the whole set of financial statement is different.
Okay.
While CSG is undertaking that trade payable alone, but
Right.
if he look at only the trade payable, he will not come to the conclusion. He need to go back. There are so many items on the component which are interlinked between this trade payable. It will impact the balance sheet and the profit and loss account and notes to the account. he may not be able to understand because he is not at all audited the full set of the financial statement.
Right.
So he need to understand the entire entities, internal control,
Hmm.
what is that entity environment and circumstances, how
Correct.
he is not having that much knowledge
Right.
and that experience to
Right.
do that particular audit because he is not the statutory auditor. So
Right.
definitely this is very difficult as part of
Okay.
that ESG. So he has to definitely discuss with the management. He has to extend the scope of the audit.
Right.
Otherwise, it is not practicable to do that.
Right. Good. So now, in this case, compliance with the requirements of auditing standard relevant to the audit of single financial statement on a specific element may not be practicable when the auditor is not engaged in audit of complete set of financial statement, or you can say from the audit of that financial statement from which that element is drawn. Why? Because if the auditor were to audit that element, he will need to have complete clarity, right? He will need to have complete clarity about the entity, about its business, about the controls, about those processes. Yes or no? Without which you may not be able to get the comfort, because over here it's an audit that we are talking about. Yes or no? So in such a scenario, auditor will need a lot of evidences as regards that single element only, because that single element is a part of a process. So till the time you don't get the comfort over the process, how do you get the comfort on that single line item? Right? So in case of an audit of specific element, certain auditing standards require audit work that may be disproportionate to the element being audited. If the auditor concludes audit of single financial statement or specific element may not be practicable, auditor may discuss with management whether another type of engagement might be more practicable. Yeah. Otherwise, what will happen? There will be challenges, and you can say it's a sort of duplication which may get involved. There could be a lot of overlapping. Yeah, because even though it's a single element, this auditor may have to perform a lot of procedures which are already performed on the audit of financial statements. So that's something which the management will have to consider as to why do they want to get into this. Okay. Otherwise, if that is not done by the auditor of single financial statement or maybe a single specific element, then the audit may not be appropriate. Okay, so if he doesn't get into the details, so he may not be getting the comfort or he may miss out. So you can say the quality may get impacted. Yeah, so that is again a very important consideration, right? Next, CA Madhur is the auditor of a company and has issued audit report dated 15th June of a particular year. Means the audit is done. Audit report is also gone out. Audit report on the summary financial statements derived from such audited financial statement is dated 15th July of that particular year. So he has also given one audit report on the summary financial statements. Okay, but that audit report is dated 15th July, means a month after issuing the audit report on complete set. Discuss whether there exists any additional reporting responsibility for an auditor in such a situation in respect of audit report on summary financial statements. Yes, over to you.
Yes, sir. The the summary financial statement is
Yes,
basically is derived from that the original audited financial statement alone.
right,
This is SCA 810. It's talk about
right,
this.
right.
But here the if the both report is issued on the same date,
Yes,
then there is no issues. Here from 15th to 15th July only he issued that summary report.
right.
Here in between this date, the subsequent event, SA 560 is talk about that.
Okay,
Is there any subsequent event that may be it could be adjusting event or non-adjusting event? There
right,
is a reporting responsibilities also and auditing responsibilities with the auditors.
right.
So in this case, he can provide specifically the event occurred between the 15th to 16th, the
Okay,
15th June to the 15th July
right,
is not considered
right,
while he giving the report.
right.
That's what I feel here, sir. Sir, in this case, in which paragraph we will report this, sir, in the audit report?
Which paragraph means?
In the audit report, there is so many sections are there, no?
Okay,
Yeah, in which section he will mention this?
so let's discuss that.
Okay.
Okay, right. So now, first of all, let's try to understand as to what is it that he is required to report on. So there's a time lag. Okay, there's a time lag of 1 month. Report on summary is going on 15th July, whereas the report on complete set was issued on 15th June. So there's a time lag of 1 month. Now, in between this period, some of the events may have taken place. Some of the facts could be relevant in relation to the period under the audit. So we are not talking about the subsequent period. We are talking about the period under audit because the subsequent period may have some bearing on the period under the audit. Now, is that really considered by the auditor? Answer is no, because the audited set is already issued and the summary is being derived from the same audited set. You don't change that, right? So that's why what should the auditor do? Auditor's report on the summary should state that summary and the audited financial statements do not reflect effect of events that occurred subsequent to the date of auditor's report on the audited financial statements. Now comes the question that how should this fact be specified? Means how do you go explain this? Yeah, so that's the point. See, in this case, please understand that it's not a qualification that we are talking about, or I should say it's not a modification that we are talking about. And for us to emphasize on the matter, so there are few ways you can report. Huh? So what are those ways through which you report? Either you change your opinion. So are we going to change the opinion in this case? No, we are not changing the opinion, right? means the opinion is clean. So if the opinion is clean, what are the other ways? Either you emphasize. For emphasizing, we have discussed there has to be something in the financial statements, because emphasizing is what you are trying to highlight that point. If that is again not the case, what do? You have this other option of other matters, right? So in the other matters, you'll specify this. Understood? Swaminathan, clear on this?
Yes, sir. Clear, sir.
All right, great. Okay, so now moving on to the next one. So I'll just move this to the next page. Just give me a minute. Okay, yeah. Consider that the audit report on the financial statements issued by CA Madhur for the above said company contains qualified opinion. So now we are continuing on the same situation. Audit report on the financial statements is qualified, right? Now we have a very specific situation. Can this auditor issue unmodified opinion? Important part is unmodified opinion on the summary financial statements, which is derived from audited financial statements which are misstated. Correct? So those are materially misstated. So that's why there is a qualification. Yes. Your thoughts. What do you think? What should be done in this case?
See, sir, here the question is talk about the existing report. They issued the qualified opinion. Now on
Right.
the summary financial statement, they're going to issue the unmodified opinion.
Right.
This is also SA 800 is talk about this.
Right.
But when there is a qualified opinion, the summary things, how it can be the unmodified opinion? That is what my question is going around.
Right. So what do you think? Can he issue unmodified opinion or not? And of course, why?
Okay, if he see in summary manner, it's a synced version of that existing one. But if he feel based upon this audit opinion and procedures, and if he feel that there is a unmodified opinion can be issued, I think he can issue. But
Okay.
always he has to refer the existing report. And
Okay.
on what basis he concluded that unmodified opinion, he has to, I think he mentioned in his report, I believe.
All right. Great. So let's look at this. Now, please understand that the summary is derived from a set of financial statements. Now, the point is that the set of financial statements, are we saying that is completely wrong? If we say that, in such a case, what should we do? As an auditor, we should issue adverse opinion, not a qualification. Yes or no? Yes or no? In the given situation, on the set of financial statements, qualification has been given, which means entire set of financial statement is not a problem. Some element of that financial statement is a problem. Correct? Yeah. Because you are saying except for that part which is materially misstated, remaining part is good to go as far as the financial statements are concerned. So that's the language that you use for qualification, that except for that part. Okay. So now in the given case, if the auditor is satisfied that the summary financial statements are consistent in all material aspects with or are a fair summary of audited financial statements in accordance with applied criteria, maybe the part he's drawing which is completely okay, he can issue unmodified opinion. However, when the auditor's report on audited financial statements contain a qualification, auditor's report on summary financial statement shall also contain the following. State the auditor's report on audited financial statements contains a qualified opinion. Describe basis for qualified opinion on audited financial statements, and that qualified opinion in the auditor's report on the audited financial statement and the effect there on the summary financial statements, if any. Right? So this sort of, you can say, explanation or sort of information is required to be included so that the users become aware, because that's the basis they are going to look at. So that basis is clarified to the users. Okay. Yeah. All right. So I think we can look at this, or maybe let's take a break. Huh? So after the break, we will continue with these questions. Okay. Yeah, sure. We can take a break now. All right. So moving further. Okay, so let's look at this. Mr. BK has been engaged by XYZ Limited to report on summary financial statements derived from. So once again, we have this summary financial statements. Which are derived from financial statements audited by him. Now this is important. Mr. BK wants to determine whether the applied criteria are acceptable before accepting such an assignment. Guide him the factors affecting auditor's determination of acceptability of applied criteria. Yes, over to you. What do you think?
Yes, sir. Here the SCA 810 is engagement to report on summary financial statement.
Right.
Here, before accepting the summary financial statement
Right.
reporting, he has to check certain points like applicable applied criteria. Yeah, firstly, he can accept that whether he is audited that summary financial statement, he only audited that full financial statement.
Okay.
In this case, there is no conflict first of all.
Okay.
But however, before accepting, he has some factors he need to determine whether he
Right.
can acceptability criteria or first thing, but the nature of the entity and the purpose of the financial statement, summary statement, what he is going to prepare, and what are the information needed of the intended user while
Right.
giving the financial. And if that applied criteria, the result of summary financial statement is that not to be misleading in the
Okay.
circumstances. Only those four line item he has to kept in mind before accepting that particular summary financial statement.
Okay. Good. So let's look at this. See, the given situation is about summary financial statements. Okay. The reporting on that. And the financial statement from which that summary is drawn, that again is audited by BK only. Right. So now, how will he determine that in terms of the applied criteria? So that is where he'll have to refer SA 810. Engagements to report on summary financial statements. Before accepting an engagement to report on summary of the financial statements, the auditor shall determine whether the applied criteria are acceptable. Now this applied criteria refers to criteria applied by the management in preparation of summary financial statements. Now, what are the factors that will affect the auditor's determination of acceptability of applied criteria? First, nature of the entity, purpose as to why this summary financial statements are required, information needs of intended users, means when the summary will go out, so it's of course meant for some of the users. So why is that really required? What are the needs of those users for which this summary is required to be given? Whether the applied criteria will result in summary financial statements that are not misleading in the circumstances. Okay. So these are the factors auditor will have to consider. Right? All right. So we'll continue on some more questions around this. Just give me a minute. Let me just open one more document. I'll just share this document now. Okay, so let's look at this now. This case scenario. So let's look at this case scenario. We'll discuss this. Given below is an extract of abridged financial statements of schemes of smart investment mutual fund. Okay, so you can talk about summary financial statements in a way here. Now, the abridged financial statements have been derived from audited financial statements of schemes of smart investment mutual fund as at 31st March XX and for the year ended 31st March XX. Okay, yeah, so we have this summary derived from the audited set. So first of all, balance sheet is given. So you can look at this. Okay. Unit capital, we have reserves and surplus are given. Then we have other current liabilities and provisions, right? Then we have assets, which talk about investments, deposits, and we have other current assets. Then we have this abridged revenue account, so which is about the information related to the income, expenses, net realized gains. So the way you'll have the financial statements of a mutual fund. Okay, change in unrealized appreciation in the value of investments. Then you have this net surplus, then dividend appropriation, then retained surplus. Abridged financial statements of the schemes of the fund have been prepared by the Board of Trustees of the fund pursuant to SEBI regulations and in accordance with the format prescribed by SEBI. Okay, so the basis is given, right? Basis for preparation is given. Previous year figures have been ignored for the purposes of the case. Unmodified opinion has been expressed by the auditor in the audited financial statements of the schemes of the smart investment mutual fund as at 31st March. Means if you look at the complete set, auditor has given unmodified opinion, means it's a clean opinion, right? And we do not have the complete set available. So what has been produced to us is only an extract of abridged. In fact, the abridged is also not completely given. An extract is given for the purposes of our reference. Now, in the given case, based on the information that is provided, you are required to answer few questions. Okay, so we'll look at some questions because it's a case scenario and wherein there are some MCQs based on the information which is provided. So let's look at all of these case scenarios. Sorry, let's look at all of these questions one by one. Now, given the above extract of abridged financial statements and the description. Okay, so on the basis of the information and the description which is available, which of the following statements is most appropriate? Now you need to read it carefully. Huh? Option number 1. Auditor may presume that the criteria applied by the Board of Trustees in the preparation of abridged financial statements are acceptable. Auditor cannot presume that the criteria applied by Board of Trustees in the preparation of abridged financial statements are acceptable. C. Abridged financial statements have been prepared by the Board of Trustees. Auditor cannot ordinarily accept the criteria applied by them for the preparation of such abridged financial statements before detailed evaluation. So you can say option B and C seem to be sort of similar. D. Auditor is duty bound to accept the criteria applied by Board of Trustees in the preparation of abridged financial statements. So now, once again, you can find that option number A and D are quite similar. The only thing is that in option number A, the wording used is auditor may presume. Okay, in option number D, it is told that the auditor has to presume for sure. It's duty bound. So which of the following options you believe is appropriate? Okay, so which is the most appropriate? Means in terms of the language that we use, which one you will say is the most appropriate? Over to you.
Sir, I go with option number A, sir. The auditor may presume that criteria applied by that Board of Trustees in the preparation of the abridged financial statements are acceptable.
And why do you select A? Why not D? If let's suppose you are selecting A, why not D? Of course, you are ignoring B and C. It appears that B and because both of them are sort of in a different direction. So
Yes,
either you
yes,
will
sir.
go with B or C, or you will go with A or D. Yeah. So of course, if you are selecting A, that means you are clear that B and C are not possible. But why you are not selecting D? Why you are only selecting A?
See, here the wording is duty to bound. Is
Right.
duty bound to accept. It's not the duty of bounding to accept whatever the criteria applied. See, and previously also we have studied the factor affecting that the acceptable criteria we have to check whether the
Right.
management is accepted the applied criteria, whether it is correctly adopted as per the applicable criteria that we have
Right.
to look at that it's not as they accept we need not blindly accept the duty, but
Right.
we can presume further also we can verify validate whether that applicable criteria whether it is appropriately applied or not. That is second part.
Right.
In this case, that I feel that A is appropriate. The wording is duty to bound is that not acceptable words.
Right. So see, in the given case, of course, the auditor will move on with some presumptions. Why? Because if the financial statements are prepared, okay, whether it's summary, single, or anything, whose responsibility is that? It's the management. Okay. Or you can say the board of directors, which is board of trustees in the given case. So of course, the auditor will presume that. Will move on with that understanding. Eventually, during the course of audit, when he'll perform some procedures, if something comes that is not in compliance with what is required to be done, he'll look into it. But to say that he is duty bound by whatever the management will do is not appropriate. And of course, B and C are not appropriate because to say that he cannot presume or he will never be presuming that in itself is incorrect. Right? Yeah, so it has to be option number A in the given case. Okay, now next question. Which of the following statements in reference to abridged financial statements is not in accordance with the requirements of SA 810? So I would say it's more of theoretical, right? Even though they are trying to create it situational, but it's more of theoretical. So your answer should be straightforward. Huh? So let's look at the options. Notes to accounts should specifically disclose that these abridged financial statements have been derived from audited financial statements. Option number A. B. Board of Trustees has disclosed that audited financial statements are available on the website of the company. Okay. C. It should be stated in the auditor's report that abridged financial statements have been compared with related information in the audited financial statements to determine whether the abridged financial statements agree with or can be recalculated from the related information in the audited financial statements. D. It should be stated in the auditor's report that reading the abridged financial statements is not a substitute for reading the audited financial statements of the schemes of the fund. Now, please go back to the question. Question is saying which of the following in reference to abridged financial statements is not in accordance. Okay, so which of the followings is not in accordance with SA 810? Yes, over to you.
Sir, if you look at the option number A, the notes to account should be specifically disclosed in the abridged statement, which is correct only. It's not
Right.
accordance. And the option number B also, the board of trustee has disclosed the audited financial statement are available on the website. It is correct only. It's not in accordance with. When you are going to that option number C, it should be stated that the auditor report that abridged financial statement have been compared with the related information in the audited financial statement to determine whether the abridged financial statement agrees with or can be recalculated from the no, it's not recalculated. See what they are providing from the full-fledged financial statement, from there only they are giving the information in the summary manner. I feel this is not correct. And
Okay.
we look at the D also, we will see that.
Yes.
Yeah. You should be stated in auditor's report that regarding the abridged financial statement, sir, please go below.
Yeah, sure.
Financial statement is not suitable for reading the audited financial statement of the scheme. Yeah, this is the correct only. So
Means which one you'll go with? A,
I go
B,
with
C, or D?
I go with the option number C, sir.
C. So you mean to say that C is not in accordance with the
Yes,
auditing standard, is it?
yes, sir. Yes, sir.
All right. So now, if you look at option number A, should the notes to account specifically disclose? Of course, this is very important. Yeah, because somewhere you'll give the basis. Option number B, Board of Trustees has disclosed that the audited financial statements. So somewhere you need to give the access to the main document from which the summary is drawn. That is what we discussed also. So is this inappropriate? No, this is again required. If you look at option number D, to state in the auditor's report that reading the abridged financial statements is not a substitute, this is again true. Because it's not a substitute, it's only a summary. To say that you read a summary and you are through with the complete document may not be appropriate. Yeah. So A, B, and D clearly seem to be appropriate. There is absolutely no problem. Now let's look at C. Now to say that the financial statements have been prepared, then you are sort of doing some recalculation for doing the summary. So is this the all required? The answer is no. This is not something that you will have under auditing standards. So what is the right option? C. Let's look at next question. Which of the following paras is most appropriate to be included under the heading auditor's responsibility in the auditor's report? And please remember, we are talking about auditor's responsibility in the context of audit of summary financial statements, right? Reporting around that. So let's look at all of these options one by one. Our responsibility is to express an opinion on the abridged financial statements based on our procedures, which were conducted in accordance with the standards on auditing issued by ICAI. Option number B. Our responsibility is to express an opinion on abridged financial statements based on our procedures, which were conducted in accordance with SA 810. So now in option number B, they have included the SA number. They have also given the name of the SA, engagements to report on summary financial statements issued by ICAI. So the only difference between A and B is, in case of B, they are specific on the auditing standard. In A, they are talking about auditing standards in general. Option number C. Our responsibility is to express an opinion on the abridged financial statements based on our procedures, which were conducted in accordance with standards on auditing adapted in the circumstances, including SA 810 issued by ICAI. So now they are talking about some of the adaptations which have been done. So it will have to be found out if that is possible or not. Option number D. Our responsibility is to express an opinion on abridged financial statements based on our procedures, which were conducted in accordance with SEBI regulations and standards on auditing, adapted in the circumstances, including SA 810 issued by ICAI. So which out of these you believe is the most appropriate option? Yes, over to you. Should it be A, B, C, or D?
Sir, here I'm having the conflict between that point number B and D. Okay,
Okay.
sir. Okay, I will go one by one. Point number A, our responsibility to express an opinion. Here,
Hmm.
the specifically the 810 is not mentioned. So
Right.
I'm ruling out, because no, whenever this kind of reporting is done, a
Okay.
responsibility will be specifically will be mentioned, like if a SCF 2410 or some other
Hmm.
review like that we specifically mention. I have seen some of the item as well, but
Okay.
in having kept in mind, and point number A is not appropriate. When I'm
Okay.
looking at the point number B also, it's look like appropriate, because no,
Hmm.
it's exactly our responsibility auditing exactly as per the requirement. When
Hmm.
coming to that point number C, here the adopted the word is there.
Hmm.
So the adopted is not appropriate, I feel.
Hmm.
Okay. Then point number D, it's look like appropriate, that
Hmm.
responsibility as per that SEBI regulation and standard and
Hmm.
SCA 800. But
Hmm.
here it's look like appropriate, but I am doubting on the adopted word. Adopted word again is inserted over here. So I
Correct.
go with the option number B, sir. B is the right option, I feel here.
Correct. So I would also agree with what you just mentioned. It has to be option number B. See, to say that option number A will be inappropriate. Why? Because clearly it's quite vague. To say that we have audited as per auditing standard is okay, but which auditing standard? You need to be very specific on that, right? Next, which of the following paras is the most appropriate to be included under the heading opinion in the auditor's report? Now, here again, please remember when we are talking about opinion, so it's the opinion as regards the summary financial statements. Okay, so in that context, we are talking about it. Okay, so option A, in our opinion, abridged financial statements derived from audited financial statements of the schemes of the fund as at 31st March XX and for the year ended 31st March XX are a fair summary of those financial statements and are in accordance with accounting policies and standards specified in SEBI regulations and generally accepted accounting principles in India to the extent applicable. Option number B. Now, please remember when these options will change, you may find that largely the sentence is similar. Maybe here and there's some tweak in the language. Okay. So there is some interplay of words. So that's why you need to be very, very careful. And that's why the question is asking you to choose most appropriate. They are not asking you to comment on the correct option or the appropriate one, most appropriate. So it may happen that some of these may appear to be appropriate, but which one is the most appropriate? That is what you need to select. Okay, so that's why I'm saying you need to be careful. Option number B. In our opinion, abridged financial statements as at 31st March XX and for the year ended 31st March XX are a fair summary of those financial statements. Option number C. In our opinion, abridged financial statements derived from audited financial statements of the schemes of the fund as at 31st March XX and for the year ended are consistent with audited financial statements. Unlike what is mentioned in A. A says are a fair summary. So they are saying they are consistent with audited financial statements and are in accordance with accounting policies and standards specified in SEBI regulations and generally accepted accounting principles in India to the extent applicable. So you can see option number A and C are quite similar, except for few words. You will find this to be quite similar. Option number D, in our opinion, abridged financial statements derived from audited financial statements of the scheme of the fund as at and for the year are consistent with audited financial statements. So I think what they have done is they have kept option A and C as same in terms of drafting it. They've changed only the wordings. At one place they are saying it's a fair summary, other place they are saying it's consistent. Same goes with option number B and D. If you look at B and D, there again the drafting of the sentence is quite similar. Yes or no? It's quite similar. The only difference is in option number B, they are saying it's a fair summary. Option number D, they are saying it's consistent. So which out of these options you believe is the most appropriate one? Over to you.
Sir, here, see, as per SCA 810,
Right,
when we are preparing that report, that auditor responsibility paragraph, here is
right,
the opinion paragraph, it's talk about
right.
in normal the general financial report in the statutory also will refer to that applicable the accounting standard, auditing standard, all this thing he will refer in the opinion paragraph.
Right.
The same way that I feel that the point number A is talk about the fair summary. Fair
Right.
summary wording is appropriate. Also, he mentioned in the SEBI regulation also, and he covered all that accounting accepted accounting principle to the extent possible. I feel it is appropriate. Point number A.
Okay.
And in the below point the B is it's nothing is mentioned. It simply it talks about abridged so and so. But point number B is not appropriate. I am
Right.
directly eliminating. I am keeping in mind whether it's A is correct or not based on the C. If you look at, it's
Yes.
talk about consistent with the audited financial statement. See the
Correct.
SEBI regulation, the purpose.
Right.
I am going back again to the factor which determines the nature of the entity, the what is the purpose of the summary financial statement, and what is that the financial information used, and also whether it is a misleading in the
Yes.
circumstances. See, considering this
Correct.
this is not consistent. See, this summary financial statement cannot be consistent. Consistent means that's exactly what it is there in the financial statement. It will vary a little bit based on the usage.
Right.
So, though I feel that the point number C is not there in my answer,
Okay.
and D also is not appropriate.
Right.
The reason is that derived from the scheme and it's not elaborated way, and it's no, it's simply giving that meaning. But I go with option number A, sir.
Perfect. All right. So I think in the given scenario, it's quite clear as regards option number B and D. Okay. They are not fit. Yeah. So you can just rule out these two options completely. So I think the only challenge will be as to which of the options amongst A and C are the correct one. To say that it's a fair summary will be appropriate. To say that it's consistent will not be appropriate. So that's why what should be the right option? Option number A. Last. Which of the following is usually not an element of the audit report on abridged financial statements in accordance with the auditing standard? EUM, other matter, management's responsibility, CAM. So which of these you will generally not associate with the audit report on summary? I think it's quite simple. EUM, other matter, management responsibility, or CAM. Which of these you will not associate with that?
Yes, sir. Here the emphasis matter paragraph. Yeah, we will give that emphasis when we highlighting. We will highlight it. Other
Right,
matter paragraph also when the other component is audited somebody else. In that also we will include it. Management responsibility is must, but the key auditor matter. In as per SCA 501, it's talk
right,
about when the full-fledged financial statement is prepared. Only for that alone it's applicable.
right.
So I
So
go
I
with
think clearly it's
yeah.
CAM,
It's
right?
clearly it's a cancer actually.
Right. So it is quite straightforward that it has to
Yes.
be CAM. All right. So good. So I think now what we can do is we can just move on to the next chapter. Just give me a minute. I'll share the document. All right. So we have couple of you can say standards as around the related services. Let me just get onto this document. Just give me a minute. Okay, so I'll just share this document now. Right, so we have this SRS 4400 and 4410. So engagements to perform agreed upon procedures regarding the financial information, and the other one is about the compilation. Okay, now as regards the engagements to perform agreed upon procedures, which is very commonly known as AUP as well. Okay, and which you get to see in some of the cases. So let's try to understand now what is this engagement. So when we say agreed upon procedures, what do you mean by that? Can we say it's an audit? Number two. And third, what is required to be done by the practitioner, or you can say the auditor, in relation to these type of engagements? Okay. So many a times, some services are required to be provided to the clients. Okay, which do not involve, now this is important. Now this is the most important part that you need to understand, which do not involve expression of an opinion on the truth or fairness of the financial statements. So what does it mean? Means we are not talking about audit anymore. Now, of course, our subject is audit, but within audit, there are some, you can say, other kind of assurance services. So the opinion is not required to be expressed. So where do you express opinion? Only in case of audit, otherwise not. Yeah. And that is where we have a couple of these requirements. One that we call as AUP, and the other one is called as compilation. Now, what are related services? Let's understand. See, the assurance engagement means an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of the intended users, other than the responsible party, about the outcome or evaluation, about the outcome of the evaluation or measurement of a subject matter against the criteria. Now, there are a lot of terms which are used. So who is the intended user? User of the financial statement. Who is the responsible party? You can say that's the management. And what is the subject matter? You can say the financial statements, for example. Okay, so that's how you should look at it. Not all engagements performed by practitioners are assurance engagements. Some of the other frequently performed engagements wherein the assurance is not there could be preparation of tax return. Okay, so which is more of advisory, management consulting, tax consulting, including the engagements covered by standards for related services such as AUP and compilation of financial or other information. Now, what are agreed upon procedures? So as the terminology suggests, if let's suppose a professional has been hired, okay, and the management has agreed with him what procedures that professional will perform. So in this case, if let's suppose trade receivables are required to be verified. So when it comes to the audit, who will decide the procedures? Auditor will decide. When it comes to review, who will decide the procedures? Auditor. But in this case, the procedures to be performed will not be decided only by the professional. It's jointly assessed. Both the management and the professional will sit together. They will decide, or you can say the management already wants some set of specified procedures to be performed to verify a particular item, to verify a particular area, and for which they hire a professional. Understood? So in this case, we can't say it's something which will be based on the discretion of the professional. I'm using the term professional because it's not an auditor anymore. Of course, it has to be a chartered accountant, but it doesn't have to be a an auditor anymore. And in the given case, the procedures are pre-agreed. Now, please remember, procedures means very clearly this is going to be checked. Say, for example, the procedure says obtain the details of calculation of depreciation in respect of PPE. Check the calculations of depreciation included in those details. Now, this word checking is quite wide. So what do you mean by checking? So it may be about verifying arithmetical accuracies there, okay, wherein he'll look at the formulas. Or he will get into the assessment of the useful life basis which depreciation has been calculated. So all of these things will have to be specified. They have to be pre-agreed. Auditor or the professional will not decide later on that this is something I want to do additionally, or this is something additionally I would have to look into. No. If there is any observation that he comes across, he will not be increasing the extent of his testing. No. Why? Because everything is agreed in advance. Yeah. Because the management wants this to be done in a particular manner. That's it. So what is the role of the professional? To come and perform the procedure which the management wants to perform. That's it. And of course, on the basis of the procedure which is performed, report on the outcome. Okay. So he'll say that maybe the depreciation calculation is correct or not. He'll not say because it's incorrect, it's found to be incorrect, there was some formula problem, so that's why I'll increase the testing and I'll now check more. No, he'll report that. So in this case, the way the professional will report will again be different. Why? Because he's now not required to express an opinion. He's not required now to give any sort of conclusion. He is only required to provide his or her observations. So the way this report on AUP will go out. So what is that way? So you can say it's a sort of checklist. So first of all, you have the procedures listed down. Then you will have you can say against the procedures where the work has been performed or not. And if that is done, what is the outcome? If the outcome doesn't have any sort of observations, no problem. So you can say no exception noted. Okay, so it's good to go. There's nothing to report on. So he's not talking about truth or fairness. He's not talking about any sort of negative assurance as well. No. It's only limited to the procedure performed and the outcome on the basis of that limited procedure. That's it. Now here again, the underlying item could be anything. It could be an element of the financial statements. It could be a part of the financial statements. So again, it may vary depending on the needs of the organization. This will be decided as to what is required to be done and how is that required to be done. Now, what is the difference between audit and AUP? See, when it comes to audit, so there is an opinion which is expressed, and that provides assurance to the users. However, when it comes to AUP, it's only a report on observations. No assurance is given. Okay, no sort of assurance is given. Yeah. So there is no conclusions as such, right? So on the basis of the factual findings or the observations, users will draw their own conclusions or may draw, right? Now, what are the general principles? See, because now a professional is involved, so that's why ethical responsibilities, ethical principles will have to come into play. Integrity, objectivity, professional competence, due care, confidentiality, all these factors will have to be considered, will have to be applied, right? Defining the terms of the engagement is very important. See, in this case, the engagement is all about agreed upon procedures. So that's why to have a clarity on what is required to be done, how is that required to be done, to what extent it is required to be done. So this absolute clarity is a must. Okay. So this has to be there, without which this engagement will not be of much use, right? So this has to be very, very clearly laid out in the engagement letter. Yeah. So of course, ethical principles, all of these aspects will always be done. So a listing of the procedures to be performed as agreed upon, and a statement that the distribution of the report of the factual findings would be restricted to specified parties. So this again has to be included. Why? Because this again is a special type of engagement, and because it's a special type of engagement, so that's why it's meant for a specific purpose. It may be meant only for the management. Maybe they want to get few things tested, right? So that's why you'll have this clause. Now here again, will the planning be involved? Of course. See, for any work, planning is required. Now, what are the kind of procedures you may have in case of AUP? It could be an inquiry. It could be a recomputation. It could be a comparison. It could be checking of clerical accuracy. Okay, it could be inspection. It could be obtaining confirmations. So anything could be involved. Excuse me. Now, what is going to be the reporting requirement? Now, this is important because unlike in case of audit, you will not have opinion, right? So what do you have? Title, addressee to begin with, identification of specific financial or non-financial information to which the AUP will be applied. Of course, the underlying statement that the procedures performed were those agreed upon, statement that engagement was performed in accordance with SRS, identification of the purpose, listing of the specific procedures, description of auditor's findings, statement that procedures performed do not constitute either an audit or a review, and no sort of assurance. Statement that auditor performed additional procedures. Statement that report is restricted to those parties that have agreed to the procedures to be performed. Statement that report relates only to elements, accounts, items, okay, which is the underlying. Then of course there's a date of report, place of signature, auditor signature, and the documentation around it has to be in place, right? So this is something which you will find in respect of this audit, sorry, in respect of this type of engagement. Okay, now moving on to the next type of services, that is about compilation engagement. So sometimes the practitioner, or you can say the professional, may be engaged to assist the management with the preparation and presentation of historical financial information without obtaining any assurance on that information, and to report on the engagement in accordance with this SRS. Yeah, so this is what you call as compilation for historical financial information, right? Now, what is compilation? So the practitioner applies accounting and financial reporting expertise, because what is it that he's going to work on? He's going to assist the management in the preparation and presentation of financial information, right? So the management will clarify what all things are required to be done, how is that required to be reported upon. Yeah, so all sort of things will have to be included. Now please remember, again, we are not talking about an assurance engagement. A compilation engagement does not require practitioner to verify the accuracy or the completeness of the information provided by the management. So what is the role? So he'll just compile that on the basis of whatever he is receiving. So he'll not check what the management has provided. So whatever is given to him, he'll just assume this is appropriate and he will compile the financial statements basis that. Okay, yeah. And of course, he'll issue a report in accordance with the SRS. Now, here again, management will have the responsibility for the financial information and the basis on which it is prepared and presented. Now, because a professional is involved, so that's why ethical requirements will come into place. Here again, it is again very, very important to have the acceptance formalities and the clarity in relation to the engagement. Means who is responsible for what are the management's responsibilities, and what is it that the professional or the practitioner is required to work on. Okay, so this again has to be clearly laid out, right? In this case, because the information is all about the data, or some of these details which the management may provide, so that's why it becomes important at times for the practitioner to obtain an understanding about that information, because that's how he'll be able to work on it in a better manner. Okay, some of the understanding about business operations, accounting systems, accounting records, particularly the applicable financial reporting framework, becomes important, right? Because that's how he'll be able to apply his knowledge on, use his experience to help the management in terms of this sort of compliance. Now, once this is done, so what is it that you will have in the report? Statement that the practitioner has compiled the financial information based on the information provided. Description of management's responsibilities or TCWG in relation to compilation engagement and in relation to financial information. Identification of applicable financial reporting framework. Okay. Identification of financial information. Description of practitioner responsibilities, again very important, right? Explanation that since a compilation engagement is not an assurance engagement, practitioner is not required to verify accuracy or completeness. Practitioner doesn't express an audit opinion. Okay, yeah. And of course, then you'll have to eventually sign off this document, right? That's the report which he is required to look at. Now what we can do is we can just pick up some questions on this. Okay, so let's look at some questions around this. A company asks you to carry out the process of confirmation of its accounts receivable having balances in excess of rupees 10 lakhs as per its books of accounts at the close of the year. So there is a specified procedure which is required to be performed. That is about confirmations of the accounts receivables having balances in excess of 10 lakhs. Okay. The work to be performed only involves preparing and sending confirmation requests to such parties, analysis of variations on receipt of confirmations, and submission of a report in accordance with professional standards. What points have to be kept in mind for inclusion in the report, specifically for such engagement? Yes, over to you. What are your thoughts? What points you will keep in mind? And in fact, you can also talk about the engagement standard you think shall apply in the given situation. So what is the engagement that we are talking about?
Yes, sir. Here the engagement we are talking about, they say SCA 4,400. It talks about the agreed upon procedures.
Okay.
And here the
Excuse me.
confirmation receivables having balance of excess of 10 lakhs in books of accounts, the close year,
Right. Right.
the work performed, all these things, analyze of valuation.
Right.
Basically, it's it's a agreed upon procedure. Here he is not going to give any assurance.
Okay.
Only the statement only he will provide the statement. What is he will provide list of specific procedure what he
Right.
performed,
Right.
and identification of the purpose for which
Right.
he agreed upon procedure is performed,
Right.
and also the statement of procedure performed,
Right.
and statement of engagement was performed in accordance with the standard and the
Yes.
related service standard.
Right.
Like that, he would provide all the statement only with relating to this, since it is not the assurance service.
Right.
Yes, sir.
Okay. Great. So clearly in the given situation, what do you find? A professional has been engaged and he is required to perform a procedure. Yes or no? It's clearly a procedure. Procedure in relation to what? Balance confirmations, their analysis, and of course, then to submit a report. If let's suppose there is any exception, there are any observations. So what sort of engagement you will call it as? AUP. So now the procedures required to be performed are already agreed between the practitioner and the management. That's why you call it as AUP, agreed upon procedures. So in this case, what are the points you should consider? Statement that the procedures performed were those agreed upon with the recipient. Yeah, because it's agreed upon, so that's why you have to specify that these were agreed upon. And this is it that you are working on. There's nothing beyond that, correct? Statement that the engagement was performed in accordance with SRS applicable to AUP engagements. Identification of the purpose for which AUP were performed. Yeah, so there has to be a purpose. A listing of the specific procedures. Now, this is again very important because when you list down the procedures in your report, you are giving a clarity that this is it that I have done, nothing beyond this. Description of the auditor's factual findings, including the sufficient details of errors and exceptions found. Right? Statement that the procedures performed do not constitute either an audit or a review, and as such, no assurance is expressed. Okay. Statement that had the auditor performed additional procedures, an audit or a review, other matters might have come to the light that would have been reported. Okay, so you are clarifying that I'm limited to only these procedures. It's not an audit, it's not a review. And if let's suppose I would have done that, I would have performed some more procedures accordingly, and maybe I may have come across something beyond what is reported on. Yeah. Statement that the report is restricted to those parties. Now, again, it is important that have agreed to the procedures to be performed. Yeah, it's meant for a specified purpose. And it's, of course, meant for a specified category of users. Statement that the report relates only to the elements, accounts, items, financial, non-financial information specified, and it does not extend to entities' financial statements taken as a whole. Right? All right, so let's look at the next one. During the course of performing a compilation engagement in accordance with SRS 4410, it becomes known to you that the client had suffered a theft loss of rupees 100 lakhs of its inventories over a period of time at a storage location visited infrequently. A claim was lodged by the client with the insurance company, which was repudiated due to certain technical reasons relating to coverage of policy. The client has not preferred a complaint or an appeal against such repudiation. The amount is reflected under the head current assets in the trial balance of the client. Discuss how you should proceed to deal with the matter. Over to you.
Yes, sir. Here that SRS applicable SRS 4410 is a compilation services
Right,
related services.
right,
The auditor is not giving any assurance. He is not
right,
doing any audit. He is preparing that compilation of the financial statements based on the primary responsibilities is management has to give the proper information to the auditors.
right,
Also, the auditor should see is there any inconsistency with the data provided. There should not be any material misstatement in that.
correct,
If he found any misstatement, definitely he has to report
right,
while he giving the report. This is the point which is inconsistent with related to this is not. But here in this question is clearly stated that the client there are suffered a theft of rupees 100 lakhs. Yeah, which may
right.
be pervasive or not pervasive. That material that is not there. But in the
Yes,
given case, it's very clearly the management is not ready to report this loss under anywhere in the notes to account or by or something or liabilities is not created, so many things, but it is not appropriate. But as far as
Right.
the compilation so that practitioner is concerned, he
Yes.
has to report this matter
Hmm.
into this. This is not inconsistent that management is not ready to provide that during his report.
Okay.
But if it is not possible, definitely he can try to withdraw the engagement. Otherwise, he will check the what is the professional, what is the responsibilities with respect to laws and regulation with respect to this matter, I believe.
Right.
But what management contention is not correct. He has to clearly, the auditor has to report this matter or try to withdraw it.
Right. Good. So if you look at this amount of 100 lakhs, okay, which is reported under current assets, since the client's claim has been repudiated and no appeal has been preferred, so it's a loss, clearly, right? And this will require amendments to the financial information. If the practitioner becomes aware during the course of engagement that amendments to compiled information are required for the financial information not to be materially misstated, or the compiled financial information is otherwise misleading, practitioner shall propose the appropriate adjustments to the management. If the management declines or does not permit the practitioner to make the proposed amendments, practitioner shall consider withdrawing and, of course, inform the management, TCWG, for the reasons he doesn't want to continue. If the withdrawal from the engagement is not possible, so the practitioner shall determine the professional and legal responsibilities applicable in the given circumstances. Okay. Next. So let's look at this case scenario. So KM Limited has engaged your firm for compilation. You also come to know company is setting up a new unit in Rourkela. Company's management has provided you with a draft trial balance and requires assistance in preparation and presentation of financial statements for the year ended 31st March 24. And the management requires this for its internal use. So the purpose is also specified. Now, during the course of engagement, there are a few things you notice. There are apparent errors in few opening balances which are brought forward relating to outstanding incentives receivable. These have been swapped with other balances in the trial balance. However, there are no credit transactions in such incentive accounts. Okay. One of the team members suggests that it is one of the duties to ensure that the revenue figures stated in the trial balance at least are verified to ensure all revenues required to be booked by the company have in fact been booked. Also suggested by his team member that even though it's a compilation engagement, quality control aspects need to be looked into. Before signing issuing a report, you once again read the financial information. It comes to your notice figures relating to setting up of a new unit have not been properly disclosed in the compiled financial statements. Okay, expenditure was omitted under the appropriate head. You are vacillating regarding the above considering the scope of compilation engagement. This team has prepared detailed documentation. Okay, so that is in place. Now, keeping in view, you are required to answer a few questions. So first, in respect of the opening balances, which of the following options you believe is correct? Such error should straight away lead to qualification, should be brought to the knowledge of the management. Knowledge of such type of errors has no effect on compliance of the ethical requirements. Above said matter relates to SA 510. Which one do you think is correct? It's a compilation engagement. A, B, C, or D?
So since it's a compilation engagement, there is no, we are not giving any report actually. Qualification is will not issue. That it's not applicable in first one. B,
Right.
such errors should be brought to the Yeah, definitely it has to be brought to the knowledge of the management.
Correct.
They
So
have
which
to
is the
adjust.
right option?
They are
It has
agree
to
or
be,
adjust. Otherwise,
it
yeah,
has to be B. Correct?
correct,
Great. So let's look
sir.
at next one. As regards suggestion of the team member regarding verification of all revenues, which option you will consider as the correct one? Suggestion is proper. Suggestion is proper as the absence of such verification may make the financial statements misleading. Suggestion is not proper as verifying the accuracy is not required, or not proper as the compliance with qualitative aspects is not required. Tell me, A, B, C, or D, which of the options you believe is the correct one?
Sir, I go with say between C and D. I have conflict because no here team member is not
So
proper
it
to
has
complex.
to be C then.
Yeah,
Why?
C that's
Because verifying the accuracy or completeness is
it's
not
not needed,
required,
not needed.
right? Okay, so let's look at the next one. Now, as regards the suggestion relating to adherence to appropriate standards on quality controls, that is mentioned, which of the following is relevant? Which of the following quality control standard you find is relevant? SA220, SQC1, both 220 and SQC1, and you say no, both are not applicable. I think it's quite straightforward.
Yes, sir. SQC one only is applicable because SA
Correct.
220Y is not applicable. It's not
Because
audit.
that is engagement specific,
Yes, yes, that is
right?
engagement visit.
Very good. So next, which of the following statement is most appropriate regarding the omission of expenditure? Above noted omission can be misleading. By disregarding such omission, fundamental principle of integrity is violated, or the fundamental principle of objectivity is violated, or this has no effect on performing compilation engagement, or this has no effect on performing and issuing reports. What do you think is the most appropriate?
So definitely it will affect that fundamental principle of integrity and competence and the ethical requirement.
Correct.
Definitely, point number A will be correct, sir.
Yes. So next one. Detailed documentation is maintained. Which of the following you believe is most appropriate? Final engagement file should be assembled not more than 60 days, more than 20 days, on a timely basis, or there is no requirement as such for assembly in the given situation. Which one do you think is most appropriate?
Sir, yes, SQC one talk about 60 days from the audit purpose.
Right.
Here it is only the compilation activity.
Hmm.
As and when they done, see, it will not take over such a long time also. As and when they complete, they can able to file it.
Correct. So one should go with C in the given situation. Right?
Yes, sir.
All right, great. So with this, we can just conclude our discussion for today. Thanks once again for your time and for this participation. Yeah, thanks so much.
Thank you, sir. Have a great day.
All right, thanks. Same to you. Manish, we can close this now. Yeah.